What's up, Greenville? It's October, so it's time for a new market update. Let's talk about what's happening right here in the upstate with your real estate market. Now, I'm going to kick this month's update off first by talking about our Bird Dog Group sub 300K home tracker. If you haven't seen it before, go to my website, birddoggroupgreenville.com. Right on the homepage, you'll find this link. And that's going to show you our tracker that we're talking about here. What we're doing is we're tracking homes that have 2 bedrooms or more, about a 10 to 15 minute drive from downtown Greenville, under a $300,000 asking price. Now, before I share this month's number and why it's important, let me give you a quick reason why we track this in the first place if you're new to my channel. Also, hit the subscribe button if you are new here so you get this update every month. Now, the reason we track the sub 300K home market is because, in my opinion, this is the market segment that's most influenced by supply, by demand, and by broader economic factors. When you look at luxury price points, for example, or even like lakefront property, which most people buy as a second home, you're seeing a lot of other factors that are at play. Yes, the economy is a factor. Yes, interest rate sensitivity is particularly high at the high end of the market, but at the bottom third, people need a place to live. They're making the average or median income. You're really going to see, for example, is the number of people moving to Greenville pushing price points up and up and up. I like watching the floor of the market for this very reason. I think it's a much better indicator. Now, here's what I'm excited to share this month. We're at 190 active listings, and that is the highest number we've been at all year, which is really, really exciting. But a lot of people I know are going to hear that and say, well, yeah, the crash is coming then, right? Here it is. Or what's going on? Well, let's talk about it a little bit. 2 factors and trends are at play here. First is one that you've always seen in real estate, and that's seasonality. Real estate is cyclical and seasonal. When the holidays start coming up, buyers take their foot off the gas. They start saying, you know what? I don't want to move in the middle of Christmas. Why don't we just put this on hold until next year? Plus, there'll be more homes in the market. Maybe the rates will go down. We'll just see what happens next year. A lot of people have that mentality. But the elephant in the room you just can't ignore is the fact that interest rates have risen dramatically over the last year. And yes, that has 100% kept a lot of buyers on the sidelines, at least just to wait and see what happens. People just get nervous when there's any seismic shift in the market. So we're seeing that locally here in Greenville as well. But I want to make sure that people understand where there's uncertainty tends to be opportunity. As an investor, I take advantage of this all the time, but a lot of first-time buyers, for example, could be doing the same. When you don't have as much competition, it's nice to shop. Like this week, we looked at some properties several times because there just wasn't the droves of buyers out there throwing multiple all cash offers out, right? You could kind of look at a house and think about it, which is super nice. But in that lack of competition, if you really want to take advantage, you have to negotiate. That's really what it comes down to. But a lot of people, I think, are just afraid to even shop because all they're thinking about is that interest rate number and what the monthly payment could be. This is where I encourage people to do the math. One, not just negotiating price on a home, but negotiating terms, particularly those closing costs or even an interest rate buy down. You hear people talk about buy downs a lot, but the reality here is that on the vast majority of homes we have sold here at the Bird Dog Group this year, most of those we have negotiated most, if not all, of the closing costs to be paid by the seller, and the seller was happy to do it. They have a lot of equity in their home, they need to sell, they're getting a good price on the home either way, but my buyer in this case is getting all their closing costs paid, so that reduces their out-of-pocket capital they need, which for first-timers especially is usually a challenge, but also some of that money given to us by the seller to play with is going toward points on your mortgage. So that's where our lending partners come into play, and they help our buyers get their interest rates down with those points that are being purchased, which lowers the monthly payment. So in a lot of cases, now that you have more negotiating power, you can certainly find ways to get your interest rate down more significantly than some people realize. New construction builders are also offering huge interest rate buy downs right now. So I love new construction for first timers as well. In other words, you just have to look at what's out there and negotiate. Like, people I think have forgotten what it's like to do that in the market, to have a little back and forth, to have a little balance. We've been so overwhelmingly lopsided to the sell side for so long, it's easy to lose sight of that. Now, before you get too crazy, just remember inventory is really low, and high rates are the reason inventory continues to remain stubbornly low. So sellers by and large still have the upper hand out there, but as a buyer, you have more opportunities to do things like get your closing costs paid or get a rate buy down. maybe even owner financing if you want to really get creative. There's a lot of opportunity in times like this. Make sure you're taking advantage of it. If you want to get this update every single month, hit the subscribe button. And if you like daily content and you want shorter versions of this video, make sure you follow me on Instagram and TikTok as well. I'll see you guys next month.